Good morning, everyone. Hey, Nick, looks like you're in here, and we'll just get started here in a couple minutes. How you doing this morning, Nick? You got audio on?
I do have audio, I think.
All right, I'm throwing on my video. Hey, what's up, everybody? I don't think our video is on YouTube right now. That's cool. That's because it's a few seconds behind. But everyone, this is Nic Chahine, the one, the only, and he even has his camera on today. So you must be feeling great.
I'm overwhelmed. I'm busy, but I want this scoreboard to finish the day like this. Slightly boring, green, big dip in VIX, just so that people just chill the hell out, and just really take, look around and see what's working, what's not working, instead of these plus or minus 2-3% moves. I don't want a big update today. Just a mild, flattish green day would be fine if the VIX stays down this much. So.
All right, and we will be covering a lot of great information today. So thank you, everyone, for. It's sort of early on the West Coast. It's about mid-morning here on Eastern time zone. For those of you who don't know Nick, he is one of our mentors here at Benzinga, and he has a special chat room inside of Benzinga Pro. So we'll show you some of that stuff in a little bit here, but we really want to show you today how you can get started trading options and just the general framework of how we think about options. I know, Nick, when I first started out, it was kind of overwhelming. And so you actually helped me a ton, as after I did a whole bunch of studying, it was like, okay, this isn't that complicated. So hopefully we can give beginners today a sense of where they can get started with options, and then show them a little bit about your chat room.
Definitely, yeah. I'll try to keep it real and in like plain, simple English, as little jargon as possible, and we'll go from there. So it should be good.
Awesome. And just so everyone knows, my name is Jonathan Mallard. I lead the onboarding and sales team here for Benzinga Pro and the Options Mentorship Program. So all my contact info is in the link below on YouTube. And then for those of you who are here in Zoom, I'll throw some links into the Zoom chat as well. So I think, let's see, Harvey had the background here. So we'll just get that background out of the way here in a moment. So then you can start sharing your screen, Nick.
Sure. I got to make sure I share. So here's the tricky part. I am sharing the screen for the people in the chat room. So I don't know if they will lose I'm sharing a screen. So I started something new that you don't even know about. Let me see. Do I want to share a window? No.
You've been live streaming your charts, right?
It is live streaming right now. That's what I'm saying. I hope they don't get cut off by me sharing the screen. But I did tell them you may lose the feed. So I'll share my screen right now. Okay. So you should see my screen. It should be one chart. And I'll ping pong back and forth between things I'm going to speak about. But so this week in general, it's pretty confusing because the news is confusing. It's virus updates. It's good, it's bad, it's infectious, it's deadly. Very confusing, to put the emotions on high alert. And then you have the politicians doing their thing and elevating emotions there. And you have the business, the Fed unwinding its QE, maybe starting its QT next year, adding a little sprinkle of unknown, and then GDP coming in weak. So it's easy to get wrapped up in the negative story, and it's very easy to miss, opportunities. So 2 days ago, we went long Upstart. The next day, it went up 17%. I didn't plan on it to go up 17% the next day, but we followed logic, method, ignored the news, and we nailed it twice, once in July and once now. So focus on what matters, and the news does not matter. And hopefully we can give you option tricks that allow you to make room for these news spikes and fluctuations from news headlines, I should say. All right. So I don't know what kind of audience we have. Did you do a questionnaire, like show us who has never done options type of a deal, so I know at what level to start?
Yeah, let's go ahead, throw something into the chat for us, for those of you on Zoom or on YouTube. Just give us a number one if you call yourself a beginner with options. Maybe a number two if you've been doing options for more than a couple years or would consider yourself intermediate, and then a number three if you're pretty much a pro. So I'm seeing here in the chat, thank you. Yeah, lots of ones here. Kim, Anthony, Rico, Toya, Key is number two. Yeah, lots of ones here, and then a few twos. So pretty much beginner. So just to echo what you were saying, Nick, what I'm hearing is overall market conditions matter. And then with your style of trading, you are relying heavily on technical analysis,
right,
to basically not be a subject to short-term just volatility,
create a buffer, create room for error. So it's almost like, people, the old school of buy and hold forever is changed. I don't know what it is. Maybe my thesis is that maybe the speed with which news goes around now, it's like nuclear. As soon as somebody burps somewhere, you find about it everywhere in the world, like instantaneously. And maybe it's fake too, so you don't know. So everybody has to be a trader at some point. For example, I like Amazon's business. I think it'll be 4,400 by the middle of next year. There is a potential. But if I'm an investor and I buy it for an investment and I go all in right here, right now, those investors must book profits if it leaps to 4,200 or 4,000 next quarter. If they don't, then they're missing out on this opportunity. It's easy for us now to jump in and out of stocks. We control everything. The news is too fast. The moves are too big. So everybody has to wear a trader's hat, even though they're an investor. Using options takes away that need. It could be just another layer of trading. Like if you're an equity investor, just start dabbling in options properly to make your equity trading much better. So there are ways to protect your stock for free. There are ways to put your stock to work and create your own dividends that don't create any extra risk. So options do open up a lot of doors. For me, it allows me to say, like yesterday, I shared the trade on Rivian and I shared the trade on SE, neither of which are surgical, both of which I'm fairly confident will work out and deliver a high yield. And they have, by design, a boring aspect to them, which is what I try to do with my options trade. It's fun to nail a nice run in options like we have been. You mentioned I'm live streaming my charts. We catch big wins intraday, but those are a lot of work. Not my style, but I do it for the gang. So I do it all day. In fact, I share, I don't know if I can show you. I may be able to show you here. Hold on. I don't want to pull up the wrong one. Okay, so this is the live stream, and I have the indices on one page, an active trade for Tesla here for somebody asked for NVIDIA. They were trying to short it, and Pfizer. So here, there are tons of opportunities. Like this breakout is 3 legs higher. So yes, you can use options, and this is hurting me right now. I don't want that for my own personal trade. I don't do it blindly, and options allows me to not be this surgical. If I want to be this surgical, I can. But if I'm not that person, I have a full-time job, I only trade once or twice a week or once a month or twice a month, then options is where it's at. I think there's a lot of benefit from doing options. So what I'll do today is just introduce you to the options and dispel a few myths and just create some excitement to say, hey, you know what? I want to look into this a little further. And if you decide to join our group, even better. So
awesome.
That's my goal today. If you need something else, if the people ask for something else in the chat, let me know. We can steer it your way.
I know a lot of beginners that I talk about options as being risky. And, you hear it all the time. Oh, you're trading options. That's really risky, man. Don't lose your shirt.
So we will dispel that myth first.
Awesome.
So, And I will dispel it by sharing an idea about Rivian that I shared yesterday. As risky as a stock can get, unproven company, unproven stock, almost no sales yet. So the stock price is over $100 or thereabouts. I don't know what it is today. How can I make it, buying shares is definitely risky because the company is what I just said. So how can I'll show you how options can take the risk out of that trade. So if somebody believes that options are riskier than stocks, that can be true, but it depends on how you use them. That's what makes them riskier or not. So we can dispel that myth first. And what I'll do is I'll define risk first, jump into some definitions of options just to get people knowing the terms that I'm mentioning, and then we'll jump into the example that I just mentioned with Rivian, which puts whatever we learn into action and dispels the myth that hey, I shouldn't talk about options or learn about options because they are more dangerous than stocks. They can be, but they are not more dangerous than stocks. Stocks can be just as dangerous. If you short a stock crazily, you're opening unlimited risk. So that's pretty dangerous. So we can jump in anytime you want. I'll start with my definition of risk because it's pretty important discussing anything.
Yeah, take it away.
Okay, so I'll start. First things first. This is the S&P daily chart. Anybody that says this is a bearish market doesn't know how to look at charts. There's nothing bearish about this. Every dip is being bought. Whether this dip will be bought or not, it is being bought. Is it a double top? I don't know what that means. Every breakout is a double top. So this was a top. This was a top at one point. That's a double top. That doesn't mean it's going to break down. It's not a tradable statement, double top. It's a hindsight definition of something. Like if this ended up being a double top, you can call it a double top. You can't short based on the double top. So let's define risk. And I'll put up a scratch pad. And I'm going to ask you, give you a little quiz, and then we'll see how it goes. So if you were giving a class, if you've been here before, if you've heard this spiel before, don't cheat. If you haven't, this quiz is for you. If you were giving a class and you want to explain to me what risk is, what would you say? So I don't have the chat up, so I'm going to give you some time, and I won't comment on your comments because I'm not seeing what you're saying. And then I'll jump in. I can tell you, I can guarantee you that everybody will get part of it right. And I bet that nobody will get the whole definition the way I think it should be displayed, just so we can better manage it. So I ask somebody, okay, how do you manage risk? And they always go to the one thing where everybody's going to say in the chat. So I'll give you a minute there to think about it. I don't know what you're saying because I don't have the chat window up. I should have pulled it up, but anyway.
Blake here says risk is what you're accepting to lose.
Okay, so how much? Okay.
And then someone else says risk is potential loss of some or all of your value or cost.
Right. So they're all along the same lines of how much can I lose, which is great because that's determines whether you take the thing or not, whatever the thing is. If you're riding a bike, how fast downhill are you going to go without brakes? Say, I don't want to take it, I may die. If somebody says, hey, can you jump between these two ledges? You won't say yes until you see what's in between. You don't take unlimited risk. If somebody says, hey, can you jump into this dark water? No, I need to know what's under it before you leap. So if you take a risk where you don't know the maximum risk, that is not my jam. Nobody should do that. That is reckless behavior. It's Russian roulette pretty much. It could work out and it could be devastating and you don't know. All right, let's get into it. Break risk down into two pieces and you would be happiest. First piece is, like you said, how much can I lose? What is at stake? What's the worst case scenario? That you decide on it, you debate it with your family. Okay, I'm willing to risk $1,000, $500, $10,000, whatever it is. You determine the amount of money that you could lose and it won't break you. You can survive it. This is an acceptable dollar amount. So you set that aside. That is not managing risk. That is deciding on risk. Managing risk comes from the second piece, which is what are my odds? Okay, so first, you don't want to jump the ledge because it's, you decide to jump the ledge because you're okay. There's not like a chasm below. Then you say, okay, so what are my chances of me jumping over it and making it? So this is the part you manage. So this is, for example, if you decide to go long a stock, you do your homework, you think you're smarter than most people that are selling it. That's why you're buying it. And you assign yourself mentally, maybe not consciously, you should, a percentage. Okay, I think I have a leg up on the other people. I have a 60% chance of winning, or a 70%. It's almost a guarantee in your mind. That's what you're thinking. So that is the part you manage, because once you do these two and you take the trade on, and then down the line, you find out some things happen, they come out with headlines, and you go, you know what? Maybe whatever I thought here is not 100% true. Now it's less true. So I knock myself down a notch. And once you knock yourself down to a point where it's like, you know what? I have no idea. Now I'm like at even with the other side of the argument. That should be your stop. So you're managing this part. That's the part you manage, not this. This you decide and you move on. So, but you're saying I average down. Don't average down. That is a loser strategy. You do not average down, because you've got a problem and you just made it bigger. Some people do it well, but those are rare. You think you're doing it well, you're not. So instead of averaging down, average in. There's a big difference. If you usually risk $1,000 on a trade, start with 500, then add the 500 later. That's averaging in. You didn't add to your risk. You took your risk in two pieces. That is great, especially up here when the indices are this high. Averaging in makes sense, averaging down doesn't. So you're managing this part. And in options, this part comes to us with a number off of a spreadsheet that we can read. It is that handy. Just one number. You take the trade, you read the number, you write it down, and then later on you track that number. It's like, whoa, that number is no longer anywhere near my percentage that I started with. I should get out of the trade. That's how you manage with options. Very simple. It helps me take the trade in a position that gives me the advantage. Always. That's the goal. So options make that easy. So the risk is two pieces. How much can I lose? And what are my odds? I make a decision here and I move on and I manage this part. Hopefully everybody's on the same page with that. So that's the big definition of risk. So let's jump into the options world. And I'm going to go into, this is a practice platform from E-Trade. I'm not recommending it. Trust me, it's got bugs, but I think they all do to a degree. So, do your homework, see what best suits your style. It's good for training purposes, so I continue to use it. All right, so this is Rivian. I'll just use this one. All right, so what are options? They are contracts, and there's a buyer and there's a seller. When we're talking about contracts, there are two sides to the contract. There's a buyer and a seller of something, and they usually have another term, which is time. How long is the contract for? Correct. So another term of the contract would be levels. Okay, what prices are we talking about? So this is a contract for February. It has 58 days on it, and it has all kinds of levels, price levels for SE, I believe this was SE. Yeah, light speed. Wait, LSPD. Well, we'll leave it. Doesn't matter what it is, LSPD. And so there are contracts, prices, levels that somebody can choose. And you can see there are two sides to the table, a lot of numbers, pretty confusing. Let me narrow it down. This side, they are called put options. This side, they are called call options. So let's dispel the first myth right away. I'll define them in a second. This is not bearish and this is not bullish. They are both bearish and bullish. It all depends on what you do with them. And therein lies the biggest pitfall for all option traders. They think like the end user, not like the market maker. If you can train yourself to think like a market makers, it's not like a bunch of companies out there that these are defined as market makers. If you're selling something, you're making a market. If you have a whole bunch of bicycles and you go out there and you start selling bicycles, you're a market maker for the bicycles. So All these positions you see here, they became available because somebody was willing to sell them. No one can buy options unless there's a market maker selling them. And market makers rarely, if ever, lose. So they rig the game to win. So think like a market maker, you're winner more often than not. Okay, so when you do when you do a class about options, if you ever read anything about options, you probably heard most options expire worthless. Therefore, market makers win because they're selling them. You're paying for them, and if they expire worthless, you lost money. They sell them. If they expire worthless, they made money. So my goal in trading options is selling stuff that's going to die for zero. So I'm basically selling lottery tickets for people, and hopefully they lose money on it. That's my goal. I put the odds in my favor, and I'll get to more about it a little bit later. I just wanted to dispel get you started in the right mindset. Don't look for options to chase. Oh, there's a big position here. Let me go chase it. Find positions that work for you and fit a thesis from the charts or a fundamental thesis, and then try to put it to work in options. Don't chase the headlines on CNBC. All right. So we talked about time. We talked about levels. And let me define a put option. So I'll use it from the protection perspective because that's the easiest way. The put is a contract called put because it provides the buyer some insurance. For example, if I own shares of this company, I don't really know a lot about it. It doesn't matter what it is. If I go in here and I own 100 shares and I want some insurance, this contract provides me insurance. And let me explain to you how. I would go out and buy one contract, this one, at 35. I choose 35. It will cost me $2.80. But each contract, out of all of them, every contract represents 100 shares, always. So this will be $280 expense. And what does it do? It gives me an insurance policy. It gives me the right, me the buyer, to sell my shares at 35 at any point in time between now and 58 days, any point in time. I won't go into details, but people think it has to be lower. It does not, but it only makes sense for it to be lower. So the buyer, me, I have insurance. Now I can hold that. I pay for it. The trade goes into my account and it says, you, Nick, have the right to sell these shares at 35, even if it's at zero. Who's on the hook? The seller. The seller who sold me the insurance is on the hook. So is this bullish or is this bearish? In my opinion, it's a bullish position. And let me explain to you why. If I really was worried about my shares, I wouldn't buy insurance. I would sell them. So the fact that I'm willing to buy insurance means that I still have hope for this company, correct? Now, what about the seller? The seller is saying they would love to buy the shares at 35. That's why they sold it. So they're also optimistic to a degree about the stock. So don't read into what a put says, bullish or bearish. Who cares? Make it work for you. All right. So if I own shares and I want insurance, I buy it. They want to own the shares, so they sell it. If nothing happens, they made $280. I slept well knowing I'm protected. Win-win. So it's not bullish. It's not bearish. It's just a trade. I bought insurance. They bought they collected money. They had the opportunity to own the shares at a heavy discount. And if they didn't, they made money out of thin air. So win-win. So that's the put. The put option gives the buyer the choice, not the obligation. I have the right choice to sell my shares at that price for the allotted time. The seller does not have a choice. The seller is at my mercy, and every day they wake up, they could own 100 shares. I just got put, that happened to me with Hood. I sold the put, it went below my put, I was assigned shares. Okay, so I wake up owning shares, I collected money to be there, my break-even point is slightly above current price, so I'm a little bit red on it. Not a big deal. So that's the definition of a put. It is a way for a buyer to protect their shares. It is a way for the seller of the put to actually get into shares. Now, there are ways you can use them to make money on the price action without meaning to own or sell shares. So do I need to own shares to buy a put? No. And therein lies the new chapter of using options. And that's where people get in trouble. So I don't have to own shares to buy that put. If I was bearish this company, I can buy the put. And if the price falls because I was right, then that put expands in value, then I sell it for a profit. For example, look at this one, costs for almost $5. This one costs almost $3. This one costs $1.50. They drop in price, right? But if price falls, this 5 turns into 7, this 3 turns into 5, this 1.5 turns into 3. You see what I mean? So if price falls, the value of the put, if it does it within the allotted time, increases, and then I can just sell it. So for example, if I bought this for $280 and then the stock collapses and then this turns into 5, I can just sell it out to close the position at 5. Then I almost doubled my money. Not almost, 40%, whatever it is. I made money pretty quickly. So what's the flip side also is true. So if I was wrong and the stock rallies, I lose the money. So they are more dangerous because if somebody doesn't pay attention, they open up a whole bunch of these, they buy this and buy that and buy this and buy that. Everything looks great. And especially if they put everything one-sided, you have one bad day, suddenly, boom, your portfolio is down big because everything was based on no science and everything is lined up the same way. One bad day could really have a big impact on your portfolio. They are dangerous that way because they bring you profits fast and they bring you losses fast. Let me see, what's moving big today? Give me a stock that's moving big today. Is Tesla up? That's always a good bet. Okay.
Yeah, Jordan from the chat is saying Tesla.
Okay, there you go. I said that would be a good bet. So there we go, 6%. Ooh-wee. People still try to short it. Okay, so check it out. The stock is up 6%. The puts, somebody that bought puts yesterday shorting Tesla lost 20%. In the February contract, let me show you the shocker. They lost 80 to 90% of their money if they used this week's contract. I guarantee you nobody used February's contract. Look how expensive they are. Yeah, that's $9,000. That's a lot of money for one contract. So they probably played this week's contract, which was $1,500 yesterday. Actually, check that. This one was $4,000 yesterday. Wow, $4,000 for one put. Who does that? Not me. Not me. You would never see me do that. You can make a lot of money, but look, 90% of that $4,000, poof, gone in one tick. So that's how they're dangerous. Why would they short it yesterday? They better have had a bulletproof scenario. That is how they get dangerous. You put it in the hand of a gambler type of person. It's not an insult. It's a description of a personality. If you like high risk bets without having an edge, then super dangerous. If you put some smarts to it, you take advantage of those people that are acting dangerously and you win easy bets. Easy bets. Okay, so if you did the bet upside yesterday, you're up 500%, 300%, 400%. So clearly you can make a lot of money quickly and you can lose a lot of money quickly. So it makes it imperative to get smarter than the average bear out there and place bets the way I do, which require nothing to happen. And this is where let's go back and continue explaining what a call is. And then I'll, wait, that's not it. Oh, SLPD, SPLD, what was it? I can't remember. SPLD. Anyway, I just want to pull up anyway, let's leave it here. Okay, so we defined what a put is. And let's define what a call is. And then we'll talk about styles of using them and how they are less dangerous than stocks. Okay, so if the put gives me the right to sell a stock at a certain price, remember that? Oh, LSPD. I just wanted the same visual for you guys and gals. LSPD, light speed. Okay, there. All right, so we've talked about what a put is. So now what is a call? So who buys a call? Let's say I'm excited about this company. I'm not so hot about, I'm worried about the next couple of days going into Christmas and all of that. I don't want to spend, $4,500 to buy 100 shares. Instead of spending that, what I can do is I can buy one call because I want 100 shares, and only spend 390. I'm going to round up $4 per contract, so $400. So what does that give me? It gives me the right to lock my price at 45. So in the next 60 days, I have the right to call my broker and say, hey, I locked my price at 45. Can you please execute that for me? And what happens is they take this off your books and then give you shares, and you pay for the shares at 45 in the next 60 days. The shares can be 42, the shares can be 62. It doesn't matter. You buy them at 45 because that's the right you bought. This locks my price at 45. You have to pay attention that you paid $4 for it. So you have to be smart about when to lock it in. So then that makes me long the stock, only $400 at risk. I cannot lose more than that. I don't have to already own shares. All I'm doing is I'm reducing my entry from 4,500 to 400. What's the bad part about it? It's only for 60 days. So, and the price fluctuates. Like today, it's down 7 or 8%, and the stock is down 2%. So I lose a little bit. So somebody that did it yesterday, they lost 7%-ish of their money. So they paid a little bit more, 30 cents more. Today it's worth less, but it doesn't matter. They're still, quote, long the stock, and they still have that same opportunity with much less money at risk. So that's the function of a call. Lock me in. I'll decide whether I want to fork over thousands later, but I want to be locked in. And the price is this much. Okay, so the seller, you should never be the seller if you don't own the shares. You can do it. I forbid you from doing it. That's how people went bankrupt with the GME spike. In this environment, when a stock can do what GME does and AMC does and Fox A, whatever Discovery A did, you will go bankrupt. It's not like a bad trade. They will liquidate your account. Nobody has that kind of money to withstand a spike that big. Or Tilray, you will go bankrupt. I guarantee you that. So don't mess around with it. If you own shares and you want to sell them, okay, that's called a covered call. That's different. But do not sell naked calls, please. So the buyer needs a seller, and the seller is taking risk. They're saying, no way, this company is going above 45. I'll guarantee you that. I'll deliver shares at 45 anytime you want. So they sell this. This is like shorting stocks outright. No good in my book. Okay, so the buyer locks in their price. So now we define the puts, somewhat of an insurance concept. The calls, somewhat as a participation to upside concept. Let's say I don't want to buy the shares. I just want to participate in the upside. This is still a viable strategy. I buy this for 400, and if the shares rally, it turns into 600. I just sell it for 600, and then I made the difference in with very little out-of-pocket expense. So this is a way to also participate upside, but that's also very enticing for people to, like somebody that did it yesterday is down 6 or 7% today. So you need to be surgical with the reason. Okay, so this is a spot where I'm going to give you a free lesson that you should put on a sticky note and stick it next to your monitor. Beep, 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 beep. What's going on? Tesla. All right, so Tesla can, according to my notes, 1050 is doable with 1020 big resistance. So do not be short Tesla here or the S&P because they go hand in hand these days. Okay, so put the acronym NT. Never take a trade unless this is actually happening. If you don't have a trigger, so no trigger, no trade. If you don't have a reason to get long a stock or to get short a stock, whatever trade it is, don't do it. Because how would you know when to get out if you don't know why you're getting in? But you're saying, I don't do charts. Okay, so replace the T with a thesis. So you don't have a thesis, no trade. Because the rule is you have to know the risk. We already talked about that. And the second rule is you need a reason, because that's how you assess if you can stay in the trade or not. So when somebody says, hey, I'm in trouble with this trade, can you help me out? Sure, just tell me why you took the trade first. And if they don't have an answer, maybe that's the reason to get out. You should have a reason, specific reason. Like if somebody shorted Tesla yesterday, what did you base it on? And is that reason still valid today? I doubt it. Then get out. So that's just an example. You need a reason for every position. Every position needs a reason. No thesis, no trade, no trigger, no trade. NT, put it on the sticky note, make it the last thing before you actually pull the trigger on the setup. So simple stuff. Trust me, simple stuff. It's ridiculously simple. Not how to win all the time, how to not make easy mistakes. Simple. Okay, so that was a tangent, but very important one. So no trigger, no trade. All right, so how can I put this concept to use? And now that I scared you that you can lose 80% of your money overnight or whatever, let's slow things down. All right, so this is Lightspeed. Let's say I don't know this company very well, but somebody came to me the other day and said, let's look at Lightspeed. And I said, okay, if a stock is falling into support and you want to get long, if you go to buy it, you're catching what I call a falling knife. So you need to determine a few things. Technically, is it falling into a prior support level? And is it going to give me an immediate response up or not? So I can't be surgical when I don't have a reason to catch the falling knife at a certain time. So how can I do this? And I'm going to use Rivian as an example because it's a high profile company. It's as risky as they get because of reasons I already noted. And it's somewhat expensive. So let me show you how options are safer than stocks. Okay, so far we defined options. I can circle back and tell you some of these columns, but I want to tie the whole lesson together and come full circle. So we started with defining risk. That's important here. And then we defined put options. We defined call options, just the official definitions, and how they can be used, and how they are not bullish, they're not bearish, and I'm going to prove to you why not. And how now I'm going to dispel the myth that options are more dangerous than stocks. So Rivian, risky company because it's unproven. Cool cars, I've seen them. If you drive around Newport Beach, they're there, and you see it in the intersections. Like, whoa, what is this? They're pretty cool. So I have no doubt that they will sell all they can make. And plus, I think Amazon is a backer, so in theory, it's not going to fail. So at what price is it a good deal? If you buy it here, it's 3 digits almost. It's 95, 96 bucks. So if you want to buy 100 shares, that's almost 10 grand out of your pocket. Pretty risky, given that it's not proven. We don't know their sales. We don't know if the stock is valued correctly or not. Analysts are not always great. So there's a lot of risk. If I buy it now, I put $10,000 at risk right here, right now, with no buffer. As soon as the stock starts falling, I'm losing money. Like today, if I did that yesterday, if I bought the shares yesterday, I'm down 1%. Not a big deal in the long term, but hey, who wants to start red? Nobody. So here's how I would do it. And if my brother tells me, hey, I'm looking to get 100 shares of Rivian, I said, okay, so I have a better way for you. Let's do this. Why don't you sell a put in Rivian? And here's how it works. So if he wanted to buy shares, and that's a very important step, if he wanted, and this is not a trade alert, by the way, so don't go out there and sell a put and you've never done options before. So if I wanted to own shares, and that is a huge if I do not want to own shares, I do not sell a naked put. You hear me? Okay. So I don't have options. I don't have shares. I want to own shares. I want a buffer zone. So I sell this put. What happens? I collect money today. No money leaves my account today. What? Yep. Credit goes into my account today. So instead of spending 10 grand, I'm collecting $400. This trade will lock up some cash out of my account. So if I have 100,000 in the account or 50,000, they will lock up some cash against it. Okay. Because I said I'm going to buy shares. They want to make sure I have enough money to buy the shares. It makes sense. You're saying, but it's tying up the capital. Yeah, it's tying up much less than actually buying the shares. So how is that a thing? So money goes into my account. And let's look at the chart. So this is, turn that off. Rivian, I'll go to the 60 minutes since it's so new. All right, and move it up a little bit. So this is where it's at now. And this is where is the put that I'm selling. So the worst case scenario for this trade, the absolutely worst case scenario is the shares fall. It's actually not worst case scenario, financially worst case scenario. It falls to here and I'm forced to buy it at 75. So what is the worst case scenario? Is me buying a stock I wanted to buy today at a 23% discount, but wait, I got paid to do it, another $4. So my break-even point is even lower. So my break-even point, I don't start losing money on this trade until after I get assigned and it falls below 71. That's the worst case scenario. I am long even at 71. Somebody that bought the shares today, if that's the case, they're already down 26% on their money from 10,000. I didn't even start losing money because I sold the put instead of buying the shares. Okay, so that's how options can be safer than stocks. So dispel the myth. Options can be more dangerous than stocks and they can be safer. So it all depends on how you use them. And the easiest way to use them for me that I found over the years is to take trades that have high probabilities in your favor. So when you go to a casino, for example, if you go inside with the mindset you're going to beat the house, you're going to be beaten. You're going to lose money. If you go in there to say, hey, house, tell me your rules, I'll play within your rules, and you let me win, and you win, kind of like that little fish that swims under the shark. So that's doable. If you think like a market maker, you take market maker-like trades at a safe distance, you make boring, consistent wins that just should not bring drama. They do every once in a while on headlines, but that's inevitable. The trade setups that I take start out with 85% certainty, at least. So put the odds in your favor, you win more often than not. It's as simple as that. So let me rephrase it. What's easier, to know where Rivian is going to go, or to know where it's not likely going to be, or any stock? So Amazon, Rivian is easy because it's new. So take a look at this crazy chart. Let's go to a daily chart. So whoa, yeah. What? So you know what the trade was on Amazon that I shared with the group? Selling an Iron Condor below and above the range. It made $2. So if I did 10, it's $2,000 out of thin air. I didn't need it to rally. I didn't need it to fall. I just needed to do what it's been doing for the last 6 months. That's it. So what's easier? Trying to snipe, okay, this is perfect entry for Amazon. Let me try to make 2,000 out of it and risk 40,000 in the process, or just try to bet on nothing. Nothing happening made me money. So I did that with Amazon. I did that with Tesla. So that's the easy, those are the easy setups that options allow you to do. Iron Condor is kind of a scary word, but it's really two simple trades. And like I showed you the sold put trade, this selling put, if I modify it a little bit, just to dispel the myth of, oh, Iron Condors, I'll never get there with the knowledge. This is a put spread, okay? Selling a put naked at 75, selling a put and buying a put below it makes a spread. I'm literally spreading my risk. I collect less, of course, because I have less on the line, risk reward thing, right? So that's a credit put spread. You've also heard it called bull put spread. I collect the credit. Look, limit credit. So if I issue this trade, money goes into my account. And what do I need to win? Nothing. I just need the price to stay above 70 and I win. My break-even point is slightly below that. So what's an Iron Condor? Since we're talking about it, I'll visually show you that. This is not a trade alert, folks, okay? If there's an earnings report in here, I don't know if there is, this would be a scary trade. But so don't go out there and said, Nick said to do this. I did not. All right, so let me see here, 170, okay. So this is the opposite of this. This is the call side. This is the put side. This is a credit put spread. Remember, we sold the put and bought a put, credit. Sold the call, bought a call, credit. The total credit now is $1.70. And now I have an Iron Condor. How do I win? If price stays between here and here in the next 60 days, 58 days, I win. And so what's at stake? The difference between this and $5. That's it. So if I do one, I collect $170, I can lose, what's the difference? 330. And each leg has an 85% odds of success, roughly. So
can you show the number that they would look at to see the 85%
yeah,
odds of
I will
success?
get to that. That's a good transition with that. I just wanted, because I mentioned Iron Condor and I didn't want to lose everybody. This is what an Iron Condor looks like. Not that complicated if you know what you're doing. This setup and this setup should be mirror image of each other. In fact, if I did like Rivian at this level, I probably would make this one more aggressive and this one more conservative. But this is the concept of an Iron Condor. I don't need to know where the Rivian is going to go if I know where the range is going to be, and I can profit from the range. So, boring trades like this one, if I do this one alone, that should be a boring trade. I can do it for February. I can do it for January. The numbers will be slightly different because there's less time on the clock. So if I go to January, you'll see it there now. Do you? No, it's lower. It's off the screen. There it is. Okay. So, I have one here. That was my training one. How weird is that? We landed on my trading one. So there it is. These two. So this is the easy wins. Boring, not sexy, but the yield is pretty dang sexy. All these trades yield between 12 to 20%. The Iron Condor yields 25, like 40%. If I'm collecting $1.70, that's an aggressive Iron Condor. That's way too aggressive for me. I would only collect $1 from the Iron Condor on $5 wide. That's 25% yield. And what I need to win is nothing. I want nothing to happen and I make 25%. If it falls, I make 25%. If it rallies, I make 25%. If it doesn't, I make 25%. If it crashes, I may get in trouble. If it super spikes, I may get in trouble. So much easier to trade like this using options. And before you know it, you'll be like, yeah, screw everything else. That's what I want to do. And that's what I did. So the idea is to get smart using a tool that everybody misuses. Most everybody misuses. If you're watching CNBC, they always tell you unusual options activity, and they zero people's eyes at this one. Okay, so let's talk about what Jonathan just mentioned, the odds. So I told you the odds is available with one number off the paper, and I'm going to zero in on that. This is called the delta. So the delta, I'm going to go to February because it encompasses more legs. Okay, so the delta column is my odds maker. I live and die by the delta. So I can define it for you the way Wall Street defines it, and it is hold on. It's like the amount of change in that option. Let's say pick this one. The amount of change in that option that happens with a $1 change in the underlying. That's the official statement. So I'm going to tell you how I use it. This is my coin flip odds maker. So current price is 96. So somewhere here. Anything around here should be about a 0.5 to 0.45 delta. It's a coin flip. If I buy the shares now, I have a 50-50 chance of making money. If I buy the put now, I have 50-50 chance to make money. If I buy the call now, I have a 50-50 chance to make money. Sometimes there's a little bit of skew like there is now, but that's how it works out. So let me take that to an extreme. If I go all the way down to here, there's a very tiny chance that Rivian is going to be at $50 in 58 days. Very tiny chance. Look at how small the delta is, 0.03. So when I sell options, I want to sell as low as I can, but still make some premium. So for example, if I sold this 65 put, I collect $2, $200, and I have basically a 90% chance of winning. Why? Because there's only a 10% chance of it coming down here. This is not surgically scientific, but I've been using it for a decade and it works. So if somebody is buying this put, they're buying hope. There's only a 10% chance. That's not a lottery ticket I want to buy. That's a lottery ticket I want to sell so somebody can lose their money. So if it was me, I'd be more likely to sell a 10 delta, a 0.1 delta, I call it 10, than to buy it. Same with the calls. If I want to say, oh, it's going to go up, let me buy a call, and it go up and I go buy a low delta like 0.16, that's just too low for me. I want to buy something here to have at least a shot. at coming to fruition, because I buy this one and the stock moves up and this one is too far up, I still lose money. How disappointing is that? If I come close to current price it gets more expensive, but it gives me a better lottery ticket. So when I buy options, I want to stay a pretty high delta, close to 40. 35 is pretty good. 0.35, 0.36, 0.37, 0.33 is pretty good. Below 0.3, it becomes more of a, I need a lot to happen in my favor. Closer to here, I don't need much. I have decent odds. But when I'm selling options, I want to be selling lower than 0.15, lower than 0.15. Okay, so you can see here that it's like poised, that it wants to go up, the price, based on the pricing in this sheet right here in front of us. It's rare that both sides are red on the same day. So clearly there's something going on with Rivian today. So I know why, because the VIX is dropping too. So like everything is cooling down. This is the odds maker, the delta. I gave you the official definition. For me, it's what I use to sell. So if you told me, let's trade Rivian, I want to sell a put or sell a put spread in Rivian, and you tell me you're going to sell it at 85. Without me looking, I'll tell you, okay, so what's the delta on $85 per share? That's this one. And you go and you say 0.3. It's like, nope, that's not for me. Why not? Hey, it could work out. It could pay a lot, $700 for one contract, but the odds are not that great in your favor. You do have a 70% chance. You say that's pretty high, but I'm telling you is 70%. The zero is 50. The 50% is your coin flip. So 70% is not that far from 50%. Yeah. So to me, 50 to 60% is a coin flip. It's not that exact a science. So 70. If I'm starting out, I want really high odds in my favor. Why wouldn't I sell something that has a lower than a 15% chance to blow me out? So that's what I want. Okay, so that's one column, the delta. I spoke about CNBC zeroing in on big positions, and that's the open interest. So the open interest column shows the positions as of this morning. So when we opened, this was the number, and it will stay the number until tomorrow morning. Tomorrow morning, they update these positions that are already in the market with what happens with this column. This column is called volume. So this column changes today. This is a not a very active options chain. So if I go into maybe this week, it's more active, you can probably see it change live. So same column, this one is the volume. Like, see, they're changing now. And this was what it was there this morning. So this is a dynamic number that updates as contracts happen. This is a static number, and nobody offers it dynamically, it just updates. We have similar columns here, volume and open interest. Okay, so we define now delta is my primary column here. Open interest is pretty important. I look at it almost every day for the stocks I'm trading. Then comes implied volatility. So implied volatility is basically like the VIX. If you've heard of the VIX, the volatility index, the fear index, how nervous are people about this contract now? And it varies week to week. Let me see, this used to show pretty, okay, so you can see they're more nervous than normal. The dashed line is, quote, their average that they track, and the solid line is current. This is bunk, don't look at the picture. Implied volatility this week is 110. Let's go see out weeks. It should be lower, 80. So people are less worried about out dates than this week. So if, what is going on? Oh, okay. So if somebody's reporting earnings, wait, who reported earnings today? Somebody reported earnings today, this morning. And never mind. So if somebody's reporting earnings, they would have a really high implied volatility now, and they would have a big difference to lower volatility out in time because people are worried about the event. This would be like the best explanation of what implied volatility is. If there's something going on with the stock this week, the implied volatility would be huge. And if you go buy an option, you'd be making a mistake because you'd be paying, twice as much as you should be just because of the earnings. And then the stock opens the morning after the earnings, half your price that you paid, poof, disappears right in front of your eyes. So even if you make the right call, if you buy the put or the call during the earnings week, you lose, I'm guesstimating, half your money right away, even if you guess right. So not smart. What you should do is, once you get better, is buy one out in time and sell one closer in time for the week against it. This way, when the stock opens, that one you sold dies pretty quickly and leaves you long the one out there. So that's the right thing to do.
Juna and Shah were saying Paychex was one from today.
Okay,
just as a quick, PAYX.
Okay,
and
so
just go ahead.
No. So, but if they already reported this, I wanted to see one that the one that hasn't reported yet. Like this dropped. I can guarantee you that this one probably was a 70% this morning if they reported. But this is also no weekly, so it's not very liquid. By the way, if you see a company with only monthlies like that, it's not a very liquid options trading stock. So be aware of it, that it might not be easy to get actual executions filled at the proper level. So just be mindful of that. That's an immediate flag, like, whoa, it's not very active, but it's still doable. So the other things to look at: implied volatility, open interest, volume, we talked about it. The delta, we talked about it. The mark is the actual middle between bid and ask. So for a stock like this might matter. So when somebody says, oh, it has wide bid and ask, I don't care, because I only deal with very liquid companies. So the bid here is 610, the ask is 690. Usually in the stocks I trade, the tickers I trade, I always fill at the middle between bid and ask. So I don't even have them on my setup, bid and ask. Don't care. I'm going to get a fill somewhere in the middle. If not, it'll be 1 penny up or 1 penny lower. This one trades in 10-cent increments. Yeah, that would be not good for me. Usually it should be 1 penny increments, sometimes 5 at most. 10-cent increments tells you right away it's not very liquid stock. Anyway, so we've gotten mark, delta, volume, and open interest, implied volatility, and that's it. Those are the columns that I have. There are other things, they call them Greeks to consider. They call, first of all, Theta. Theta is a fancy word for time. I started by saying that these are contracts. The January contract has 30 days on it. The February contract has 58 days on it. And if it makes only sense that, one would cost more than the other, right? More days on the clock. So if I look at the 125 contract for this coming month is 65 cents. The 125 contract for a month extra would be 177, 1.7, 1.8 almost. So if you go out to 2023, it's 9.5. So if I wanted to buy the 125 put for the stock for 30 days, it's $65. It's $180 for 58 days. And it's for over a year, it is almost $1,000. So you can see how time, theta, affects the price of the stock. So if you're a buyer of options, time is your enemy for most people, because everybody buys out of the money things. If you're a seller, time works for you. You want time to tick as fast without anything happening, because that's how you win. Things die for zero. That's how the seller wins. The market maker wins. The micro market maker wins. So time is definitely a factor, and you need to pick your time well. I don't sell options into earnings because the earnings reaction overnight is just a crapshoot. You can do all the homework you want. The CEO of that company doesn't even know what's going to happen. So be careful. Be careful with that. The wild card of earnings. So when selling options.
And Nic, thank you for going over this. I mean, I'm sure for a lot of the beginners here, it's like learning another language, right? And you're great at communicating in simple terms for things that some people make overly complicated. What I wanted to show was on Benzinga Pro. Do you have Benzinga Pro up on your machine right now by chance?
Yeah, you mean here? Yeah.
Yeah, I wanted to show them your chat room where, this isn't just a one-time thing, but every Sunday you publish, I think you did a 2.5 hour video on Sunday, right?
Yes.
You covered 133 companies,
Yeah.
all the technical analysis in about 2.5 hours. So for the beginners, what I want to emphasize is Nic, for his members, he literally gives you those levels to look at. He's not telling you all the time exactly what to trade, but you can prepare for your week and in advance know what's on your watch list and know what to look for. And if you're a beginner, you're not going to understand every single little nuance right away, but it's like just immersing yourself. It's a full immersion course. Right. And looking at how Nic thinks about these companies, what to watch out for. So I personally have learned so much from you, Nic, just from watching those Sunday videos and learning how to think about these companies like a market maker instead of a gambler, like the casino instead of the gambler.
This is a unusual group of people we have there, Jonathan, and because I tailor to, I cast a wide net is what it is. I do have the live chart up and running. By the way, if you can get somebody to make it stop doing that, that'd be great. I sent an email. I don't know why it does that here. So anyway, the active traders have now a live feed that is going on as I'm not there, and I'm sure some stuff went out of. I'm looking at the SPX, is probably out of their window, but I told them I won't update it for another hour. So they have their playground, and we can scalp stuff intraday. Then we have the people that are in it to do some swing trade opportunities, and I share almost one a day in the chat room. And I posted in here, and last night I posted a video about the Rivian and SE entry points with great detail. And this is my morning note. Every morning I say, look out for this, look out for that. Here are the charts and lines that you need to pay attention to in the S&P, QQQ, IWM, and here are the futures. And then who's reporting earnings there. I could have gotten my stuff. And then a live trading link, and then question and answer that goes about slower trading stuff. So whatever your style, if you're equity only, I believe this person is equity only. So trying to get into options. So if you're equity only, you've got some stuff going for you with our chat, because my videos are probably about 15 minutes long for every trade setup. Yesterday was almost 26 minutes because it had 2 trades. Day before that was 12 minutes. It was Upstart, UPSD. And if you missed it, that was a nice win. 17% spike in the stock, which is a bigger win in options. So there's a little bit of everything. Whatever your style, you will find benefit with us, because we will discuss the stock first, and that applies to whatever style. So the fact that Upstart was along yesterday didn't mean you needed to buy shares. I mean, calls. Or in fact, I said I would not buy calls. I would do everything else. I would buy shares. I would sell a put spread. I would sell puts to own shares. I would not buy calls because they were so expensive. The VIX is so high. So there's a little bit of everything. And if you're in it to learn technicals, the amount of information that I share in the live trade session about technicals and in the videos is insane. I learned it over decades, and it was a few big aha moments, and I share them every day that are life-changing as far as chart reading, which is so simple, you won't believe it. So I encourage you to try it out. I don't know what kind of deal you're offering, Jonathan. Whatever you're offering, I'm sure you have the usual 7-day out. So really, it's risk-free. And then the question is, why isn't it free to start? Because you won't get mentally engaged if there's nothing on the line. That happens to me. I took a free trial from a famous charting program, Symbolic, and it didn't cost me anything. I didn't give it a fair shot. 2 weeks later, my free trial ended, and I still don't know if it's good or bad because I didn't use it. So just to use an example. So if you get engaged by putting something on the line without any risk, that's even better. So I think you will find great value in what we have to offer. First of all, the Sunday videos, it's not a video, it's a charting session like this. And I offer my time, and I throw the whole thing together, and I give you a sheet, tell me tickers you want to see. I had to whittle it down to 133 on Sunday. We had more. I have one person that asked for 80. I was like, I don't think I'm going to give you 80 tickers today. I mean, we have hundreds of people in there. There's no way. So anyway, and I share a table. I wish I brought a version of it. Anyway, I had a table of contents with the actual charts. So the idea is to get the information, have it live, have the recourse to go check it out on video, and then also to have a reference to go back to it and with a click, not having to pull up a video and watch it. And I'm going to bring you the table right here. Sorry, my computer is about to spit in my face and say, what the hell are you doing? Okay, so this is the actual table from this last Sunday. 131, but there were 2 or 3 that got thrown in to the mix last minute. Yeah, 1219. So these are the charts, the tickers, and these are the charts that went along with them, and some of the comments as well. Some don't have comments because the chart is self-explanatory. So if you click on the chart, pull up the picture so you can have a reference to it. There's no short of effort among this group, guaranteed. And if you're missing something, let me know. I probably have it. And if I don't have it, I'll go get it. So if it makes sense. We're not slaves, but we want to progress and get better and make a better experience for everybody, including myself. I recently picked up a new tool, which is what you see here. I forgot to turn it off. This is a Harmonics tool. So once I vet it for myself and say that it is safe to use for my style of trading, I'll share it with the rest. It's not cheap, but I think it's worth its money. You know, we're constantly evolving and adding value.
Absolutely. I mean, you just started doing that, the live streaming, like last
live streaming
week, right?
is amazing. I'm look, it's sorry, people. They are watching the screen right now. Let me see. I have 142 people in there right now. So watching this, they're not hearing what I'm saying because I muted myself to them. But this was the upside scenario, and you can see it met its target, and I didn't update it. This is fear. This is the cues. That was the target 3 of a 3-step trade I shared with them yesterday. This is the small caps. I am slightly long this, and this has hit its target up here, the small caps as well. And look, I put this resistance line before the market opened, and we're at it. So I wouldn't start longs here. These guys and gals know not to start longs because I just said there's a resistance there. And these are live trades. Somebody wanted to short NVIDIA yesterday. I gave them the short. It paid this morning. And if they didn't stop out, I told them just to out. You can't see the word here. They should have stopped out. Otherwise, they're holding some losses. Pfizer wanted somebody this morning. This was a huge win yesterday. I said, something is going on with Wish. You should buy a 15-cent call. They did. The 15 cents turned into a huge win because they bought it here. And it did this all day. I missed it, but that's okay. This is Tesla with the Tesla comments for today. So everything you want, we can try to do and have a bunch of great people in there. The 140 people, we just lost 2. The amount of people, I'm always surprised at how willing they are to help each other. So I'm eager to get back to them. But I think it's important to try to grow the group even further. So these are the 140 that can actually do this during the weekday. I hope they're not going to get in trouble with work, but I'm pretty sure they're adults about it.
Right. And a lot of the people that I talk to on the phones do have full-time jobs, and they tell me, Jonathan, I can't trade in front of a screen all day at my job. Do you have something for me, or can I still use this? And my answer is always yes. That's actually Nic's favorite way to trade, is where you set up the trades, you do it in a smart way, and then you just wait for it to play out. Maybe you check in on your positions every morning, every afternoon. But as long as the thesis stays the same, you don't have to do anything.
So this is the perfect example. They don't make stocks more violent than what just happened with Upstart, right? So somewhere in July, I can't remember the exact date, I did homework based on your feedback. And part of the homework, I drew this box. I said, this is a violent stock. And strangely, for a whole month, it's stuck in a very tight range. I said, I looked at technicals. I said, this is a technically wound tight opportunity. Let's get long. Okay, so I shared a video then about how to get long, sell a put. I moved the boxes, but there were boxes down here. How to sell a put spread, buy a call, which wasn't very easy to do because it's expensive, buy a call spread or buy shares. And I said, this is the breakout line. And then it did this. And then it started falling apart. And somewhere in here, they said, is it time to get long? I was like, not for me, because I cannot explain this. So how would I dare assume that all this is solid? I can't. So I left it. I fought a whole bunch of people that tried to get long. Nope. And then even here, they said, what about now? Still no, because I want facts, not opinion. And if I had gotten long here, then I would have had opinion about this. And I don't. I got long here. I said I want it as close to my entry point, which was 124, 125 as possible. And then finally it fell into here, closed the gap, fell into the line from which I thought it would break out. I was like, okay, now I don't have much opinion. It's fact. We gave it all up and it's going to bounce. It probably will find sellers. So scalp the profits. And then the next day it popped 17%, 16.7%. So the idea is this was a sleeper trade that was a monster win, and we just got to do it again. And if they didn't book profits, they don't have my style trading. Whenever I get a 20% pop in a stock overnight on a trade that I just started, I always book it and then restart it later, because that is a gift. This trade had a month on the clock, maybe a month and a half. It's a gift. Overnight, 17% win, a pop. So the win is much bigger in options. No, that should be booked right away. But anyway, that's up to them. The trade is still statistically viable. And to give you a visual about it, I said you can sell puts or put spreads and buy calls. Doing all both would be super aggressive. And if they did that, money. And this was the upside potential target that I had drawn for it.
Yeah, that's a great example.
So yes, snoozer trades designed to be boring got pretty exciting in a good way pretty quickly, but it's still a boring trade, yet delivered everything pretty quickly to illustrate that there are wins to be made, and they're not fantastically wow. It should have bounced a little bit and just delivered the profits over time. That's why it's boring. Instead, it delivered all of them, most of them in one day out. So I'm a slowpoke because of what I do. Like right now, I'm sharing 2 screens and it's pretty exhausting. So I don't have time. Like I'm managing a trade and I'm literally losing money right now because I can't go to close it. My break even is 275 and I think it's probably at 325 now. So I'm losing a little bit of money. So I don't do these intraday trades because I'm liable to make a mistake. So this suits my style better. So I definitely share at least one a day, at least 4 times a week, a setup that's designed for somebody who's not a professional trader. And when I say professional trader, I don't mean like that's the way you make a living for your entire family. You need to have professional trader habits, whether you're trading occasionally or not. If you're not, then you're winging it. And professional trader habits include NT&T. They include stop out. If you take a trade and you come to me, I'm down 70%. It's like, where was your stop? I mean, why are you down 70%? Unless you got caught in one of these, and those are rare. So you need to have a stop out. And stop out sometimes is amount of money. Sometimes it's a percent. Sometimes it's a line on the chart. Like if somebody said, I'm out if it loses this one. They did great because as soon as it lost that one, it did this right after. Somebody that didn't have a stop out based on levels got caught. So it happens, but not often. Usually the accident unfolds in slow-mo, like right now for me. But I'm still okay. So the point is, I promise you one thing, you will be a better trader once you leave the group, and hopefully you don't leave the group. I have names in there that have been there for years. I see them and it's like familiar. It's a great bunch of people. They help each other. If somebody asks a question and I take my time answering it, somebody pitches in if they're looking for a link or something. And how about this? I'm going to open it up to charts. Like we'll take 3 or 4 charts, however you manage your time. And we're going to have a deluge of tickers pop in, and they're going to be capitalized and popping them again and again because they want to discuss their charts. Guess what? You join the group, you get to do this every day, all day, and even on the weekend, anytime you want, even in direct messages or, person, like one-on-one. Say, hey, Nick, what do you think of this? I'm looking to get long, or I'm in trouble with this one. Do you think I have a chance? All day, every day for a whole year. So go ahead, let's open it up. Give me a ticker. What do you want?
I know in the YouTube chat, they were looking at GameStop and Lucid.
Okay, Lucid. Let's do Lucid. So I'm going to give you another lesson for technical analysis, and I need to move Jonathan's head for that. How do I move it? Oh, okay, I can't. Anyway, so Lucid, this is a daily chart, nothing fancy, right? If you were one of the people that bought it up here, I could have saved you so much hassle, right? With one little trick. So I gave you NTNT. Now, before you take any trade, I don't care how solid that company is, how solid your idea is. Do me a favor and do one thing. Look left. Just look left. So if you bought it here, and before you bought it, you just looked left and you said, holy crap, last time it was up here, it was a freaking disaster. I'm going to wait out a few times. It gave you 1 chance, 2 chances, 3, 4, 5 chances to consider looking left before you got long. And then you say, it doesn't matter. I'm in it for the long term. Well, it doesn't matter. You're in it for the long term. You could have had twice as many stocks if you just waited 2 weeks, because you would have seen the debacle. Anyway, looking left on the chart helps. That's tip sidebar. All right, so Lucid, if I were to say right now, you have an apparent zone between 42.50 and you have buyers anywhere below 37.50. And if I wanted to also draw your attention to a line from 223 candle, this one right there. You don't see candles like this often. Check it out. It's just lunatic. There. They opened and closed about the same level. They went this high, this high that day, and then they went this low that day in one day. That is insanity. However, it does give you a tradable range, an idea of, let me see my lines on Lucid. So I put a box on it, and if you extend it right there, look at where price is, right in the middle of it. So this area has been relevant from 223. Keep that in mind, okay? And looking closer in time, the box I just mentioned, so we can eliminate the noise, I'll drill down and give you actionable lines for the next couple of weeks. All right, so this is Lucid. You need to hold this circle. This blue is a threat. I'll move it forward. It is a support zone. You do not want to lose it. Technically, you're probably going to lose 30 if that happens. I'm not forecasting that. I'm just telling you, look out for this line. You lose this value, you're triggering a bearish pattern that could take it to 28, 29. I'm not being bearish. I'm telling you what lines lie there. This is a resistance zone. If you want to add lines on top, you have sellers lurking in here through 41.50. That's a fact. And you have a potential breakout zone right here. It is resistance, but if you do break through it, you have a little trade up from there. You have resistance up here. Whoops, I don't want to do that. You have sellers lurking up here too. So if you take a long and it gets here, book some and trail it, because if you get above it, you're going to get to here. If you get to here, I would get out for a trade. Meanwhile, be diligent to stop out for a trade if you are long here and get engaged here. Now, if it does go below 30, that becomes a pretty good entry point for a swing trade opportunity, like from an investment perspective. Look at it. This was a place where they blew up, and this was a place where they failed for 10 months, and suddenly they took it to the moon, and now they're drawing a head and shoulders that could take it right back there. That would be an entry point. So I have an alert to start looking here, and I'll put another alert to go long here if I haven't yet. So that's Lucid. This happens in the chat room all day. What was the other one? GME. Okay, so I don't know much about the business and how they're staying in business. They need to evolve it. Maybe they are, maybe they aren't. So these comments are technical purely. I don't need to tell you that it's stuck in a range, albeit a very wild range. So just like Amazon, I would sell an Iron Condor on the sucker and let them fight it out, knowing the full risk of it blowing upside. Or if you're bullish, sell a put spread and let them defend this line. Now, if you lose this line now, it's going to bring it down below 100, maybe to 79. No, 93 or so. It will have buyers down here, strong buyers down here. Now, logically, there is no logic to the stock. Don't confuse your emotions and opinions about the company with the price action of the stock. There are sellers lurking from 175 to 200, stronger at 225, and you go above 250, get out of your short positions. You're going to the moon. Well, to use their term. Do I have lines? I must. All right, there you go. Let's see what I have. Okay, so whatever I did these lines, I acknowledge the battle zone and they're still fighting it. Going below it and then going right back above it, the bulls are trying to recover from losing an important pivot zone. So this is less likely than this, in my opinion. So I'm not taking sides, but beware if you're long. There are sellers lurking. So what you really want to avoid is the bounce and then so put an alert if you're long at losing that candle and say, uh-oh, that candle should not be lost. This one, that's 130-ish. It moves so fast you can't even tell surgically what that value is. This one, you do not want to lose that. And you can see the bears are in charge on a 1 hour chart. 1 hour chart. Perception is everything, right? So, okay, let me see. Reading the comment. What else? Give me another ticker, if you want.
Sorry, we had, let's see, I'm looking in the chat here. Oh, it went away for a second. We had Tilray. Someone was asking about pins earlier. Pinterest.
Oh, okay. I just did pins. Pins is an investment entry opportunity, in my opinion. So last year, the pandemic brought about two concepts: social media. We all had to do it. We didn't have a choice. And online retail, right? Everybody had to buy everything online. And this one is both. So I don't understand this. And if you think about it, in 2019, April, I think, popped and failed. These are weekly candles, by the way. In 2019, late in the fall, a month worth of fighting and failed miserably. Look how long it took them. It took a pandemic to get back here, fight over it, and then go 700% from here to here. And now they gave it all back, stuck in the same circle. This is a starting point. If the markets don't collapse, this is a good starting point. The upside potential, you're going to have to face a lot of resistance at 40, into 40, 41, more so at into 44, even more into 48. But this is a decent starting point. So from a weekly perspective, so that's a slow poke trade. I don't go all in because the markets could correct and take this one down as well. I have an alert here to say basically mortgage the house, remortgage the house to get back into it. I'm a better long than a short here with Pinterest. How do I put it into action? I sell a put to own shares and buy a call or call spread. This way, I'd be super long with almost no money out of pocket. And if it doesn't rally, I don't lose anything. And if it falls, I buy it much cheaper. So it's almost a no-lose situation. That's how I would trade it. Okay, so I don't know what time you had allotted for this show, so I'm going to keep it in your hands to tell me.
I think I know your students are waiting for you to get
right,
back
so
on
I don't want to
the
completely
live trading. Guys, this has been so awesome having you here with us, Nic, live on Zoom and on YouTube. We've got probably another 20 tickers that people mentioned, but what I want to emphasize is Nic goes through usually about 125 tickers every Sunday morning live like this on a video, and then it's also on a recording for you. Then he's giving you bonus videos throughout the week. Hey, here's how to set up an Iron Condor. Here's a specific trade. He'll do like a 15-minute video with all of the details on one trade at a time. And then you have live access to him in his chat room on Benzinga Pro and on the live stream. So if you're a beginner and you want to learn how to trade options, this is an amazing way to immerse yourself in that knowledge and learn how to trade like Nic. Don't be a gambler. Trade with the same direction as the house money. And today you can get 58% off of the options mentorship plan. So I threw the links in both of the chats, and my contact info will be in the chats as well. So, but Nic, thank you. I just want to say thank you for spending your time here, sharing some of your knowledge, and hopefully, some of the people here will want to join your chat room and join that community to continue the education.
It'll be fun. I hope you do, because if you're serious about investing, value is what we try to infuse in there. And I promise you, on my side, there's going to be super effort. I go through like 2 of these maybe a day. So I am seeking a sponsorship from C4 or Bang. If you have an
Bang Energy is where it's at.
Seriously, I sent a message to C4 to see if they will sponsor me. I will do backflips to try to help you become a better trader. That's the goal. I'm not a trade alert service. I share my trades every day. That's not the service. I promise you, it's for you to find your fishing pole and be good at fishing your own fish. Even if it's not my style of trading, you will become a better trader, guaranteed. I guarantee you that.
Well, thank you. Thank you again. Sure. And then I'll go ahead and share my screen here.
Okay.
Just to go over more in detail how people access all of the information. But yeah, thank you. And we'll talk soon.
All right. I appreciate you putting this together, and I'm going to rudely leave in 3, 2, 1.
All right. Take care, Nic. And I am just going ahead and sharing my screen here. So you should all be able to see that now. And so what I have pulled up here, and I do also want to make sure that I can bring the chat back up. Let's see here. I have to bring up the Zoom chat. Oh, I lost. Oh, there it is. There's a chat for Zoom. I'm just grabbing those links for all of you. I'm going to show you right now where to find all of this information from Nic within Benzinga Pro. And let's see here. It's in the webinars link. I'm just grabbing that for all of you. This is going to look a little crazy here because I'm going on to YouTube. But if you're on YouTube, the links are right there within the chat. And I'm just copying this really quick for the Zoom. So I'm throwing that into the Zoom right here. So 58% off today on the options mentorship plan. I'm throwing my phone number in there as well as my email. So if you have any questions whatsoever, feel free to reach out to me. And Nic is awesome. I mean, I text him on a regular basis, and he is so helpful and explains things in a way that most people can understand. So with that being said, let's take a look here on Benzinga Pro. You'll see there's a lot of other tools on Benzinga Pro. All of this is included with the options mentorship plan. So the Benzinga Pro news feed, charting, all of that good stuff, scanners. But what you're concerned about with the options mentorship is this options inner circle chat room. And if I scroll up here, you can see that Nic was talking about the SPX chart, and he's answering questions in here. And this is also where you'll find links to his daily live videos and his longer videos on the weekends as well. He also posts his daily trade plans and updates here within the chat room. So this is going to be the main area where you get his content. And then you can also watch his videos and log in to his live streams. So let's see here. I'm just bringing YouTube back up on my other computer here so I can see if you have any questions on YouTube as well. Yeah, you do get the scanners. I see that KH. So on Benzinga Pro, we do have the scanner tool. And so this is a real-time scanner, and you can scan this for 5-minute percent change. You could just see what the gappers are in the morning if you filter by previous close. And then we have very specific filters. So I could add in percent change 1 minute. If I just want to see stocks that are spiking at least 1% in the past 60 seconds, I can just add that as a filter, and you can see it's only showing me companies that are spiking at least 1% in the past 60 seconds. And then I could customize my columns here and add that as a column. And then I could sort by that change in the past 60 seconds. You'll also notice that the refresh rate is defaulted to 10 seconds, but you can make that real time as well. So you get all of this analysis with Nic Chahine, but that's on top of the essential plan for Benzinga Pro. And so you have the mentorship in the chat, then you have the scanners, a research calendar where we have 14 different calendars in here for earnings, analyst ratings, FDA, unusual options activity. All of this is included in that setup. And today only, if you sign up for an annual plan with options mentorship with this link, you're eligible for a free Chromebook along with your subscription. So it's just nice to have a little extra machine that you can take with you. So if you sign up today, that's $1,414 for the year instead of normally it's about $3,400 for the options mentorship. So yeah, that's my sales pitch, but I think the value is pretty obvious. I feel great selling this to people like all of you. Jordan, no, we can't send the laptops to Singapore, but just shoot me an email. If you're international, we can work something out. Those are only deliverable within the United States, unfortunately. Otherwise, we would love to be able to send those all over the world. And we do have members all over the world. So let's see here. I'm just seeing RT, that deal is for a one-time payment. So we do have other payment plans available outside of this holiday deal. So just shoot me an email if you can only pay monthly or quarterly. It'll be a lot more expensive that way, but if that's better for your cash flow, we can work something out. Awesome. Thanks, Jordan. Glad to have you on board. Awesome. And then let's see here, PTN. Let's just take a look at, I want to show you guys some of the charting that's available within Benzinga Pro. So, as we're just going through some tickers here, Nick was using TradingView for his charting. You'll notice that inside of Benzinga Pro, we have very similar charts that actually come from TradingView's library. So if you want to do your technical analysis, you can see that you can do much of that same drawing and taking notes using drawing tools on Benzinga Pro. So I could take some notes here. I could add indicators. Say I could add in my MACD or RSI or moving averages, whatever you want. You could add those to your charts here. And then you do have this in real time on Benzinga Pro. So to see if I have this pulled up, these 1 minute candles will update, multiple times a second if it's moving. So you can see what is going on in real time. Yeah, in terms of lifetime, we don't have a standard price for lifetime, but if you're interested in a lifetime subscription, again, just shoot me an email, give me a call. And we do have lifetime memberships, but that's kind of treated on a case-by-case basis based off of which features that you want included on that. Just because the mentorship chat rooms are kind of a special aspect to the subscription, so that would change the price of the lifetime. All right, let's see here. Any other questions? Do you have the API for Benzinga to trade on Thinkorswim? Yeah, that's a great question. So right now, we do not have trading execution within Benzinga Pro. That is something that's on our wish list. that we have done some work on in the past. So in fact, we're in talks with some different brokerages right now. So realistically, hopefully we can get that going probably second half of next year, maybe portfolio integration before that. So do me a favor though, once you're inside the system, you do have the send feedback button in the upper right corner. And that's how we, prioritize the scanner, the advanced news feed where you can say only show me news on stocks from 10 to 20 bucks with a certain RSI, that type of stuff. So please do request that trading execution, as I'm sure that'll be helpful for a lot of our members. But right now you have to execute your trades through your broker. Short and sweet answer. And then if you already have Benzinga Pro, I can basically upgrade you at the 1414 rate. So again, just shoot me an email and I can make that happen on your account. All right, I'm just making sure I'm not missing any questions here. Someone was asking earlier, how much money do you need to get started? And of course, $1,400, that's the cost of a year-long subscription. And honestly, it's going to save you so much pain and heartache. Most of the people I talk to have blown up at least one or two accounts. I mean, I talk to people probably every other day that have lost more than 20 grand in trading. And so in terms of building from the ground up, don't get me wrong, you do have to have some capital to trade with. I honestly would pay for this for the full year if I had $2,500 to work with. I would pay the $1,400 and then I would just start working with what I had with that other $1,000, $1,100 or so, because I would be building from the ground up. I would be building a skill set, and then I'd be working in my W-2 job or my side hustle to keep building up that trading account so that I had more to work with. Of course, along with trading with Nic. Now, don't get me wrong, there are limitations in terms of what you can do with credit spreads or doing iron condors on your brokerage. That is brokerage specific, but we'll give you the education and we'll help you to know what to say to your brokerage so that you can get access to those other levels of trading. And what we didn't really cover today is that Nic also shows you how to responsibly simplify the trades. So let's say you can't do one of his trades, like say an Iron Condor. Well, if you were very, very disciplined with your stop, or if you knew exactly what your trading plan was, you could still do it with buying a call or buying a put, other simple single leg options, even though that's not Nic's preference. He does prefer selling the credit put spreads because it is more conservative, because it does save your capital, and because you want to play like the house money, you don't want to play like the gambler. But we'll help you each step along the way to get you started with your trading and be successful for the long run. All right, I'm just looking here. Yeah, Jay, give half of your capital away. It's a valid point, but how much do you spend on college? Like I don't know how many tens of thousands of dollars on college. I'm not using 95% of that today, versus this is something that you're putting to work right away. This is way, way more cost effective than some of the other education programs out there, spending $10,000, $20,000 to learn how to trade. And you're getting more intimate interaction with Nic than you would with some of those other programs. So, it's like, it's like paying for half of a college course for one semester. And you really can earn your money back and make a living out of this if you want to. So it's absolutely worth the money, in my opinion. How do you cancel if you don't want to continue? Yeah, we make cancellations super simple. There's a 7-day money back guarantee. So if you pay today and then you decide you change your mind, you just shoot us an email or call us, and we'll make it very painless to give you a full refund within 7 days. After the 7 days, there's no prorated refund, but you would have access for the remainder of the 12 months, and then it would not renew after that. And then you are locked in at that lower rate, so you don't have to worry about it shooting up to $3,500. It would just renew at that same $1,414 the following year. Let's see here. Let's see here. Yeah, KH. Yeah, any questions about the subscriptions? Just shoot me an email or call me. I'll be back on the phones this afternoon, so I am available to discuss more. But just in terms of what's on Benzinga Pro here, I think, we spent a lot of time talking about options, right? But there's a lot more research that you can do in here. Some people do multiple types of trading. Nic is not big on basing his thesis on the news, but I think we all know that news does move stocks. So if you are looking for fast news, we have the best news feed in the game for US equities. And you can do a lot here just to find those catalysts that will cause volatility. This might not be for the same type of trading that Nic does, but let's say if you do want to find those movers in the morning or those news catalysts that are going to cause those big moves, you could use our market moving exclusives for one example, and these will be items only from Benzinga. So no one else has access to these. And we've seen probably 4 or 5 examples in the past month of double or even triple digit moves based off of our exclusive news items. Then I could add in some other things here, like let's see here, under news, I've got asset sales, buybacks, contracts, FDA approvals, rumors. I really like analyst initiations and upgrades for bullish catalysts. And then I like biotech and healthcare. And then of course you can also highlight some of these if you want to, so they pop out at you more on your news feed. So as I'm checking those boxes, I'm telling the system, only give me this type of news. And so it significantly reduces the noise on my news feed, and I can stay more focused on things that apply to my trading strategies. So, and then we've got the screener filter here. So if you want to find some low float stocks or for some stocks with high relative volume, I could click on RVol here and set that to a minimum of 2. So now it has to be trading at 200% or 2 times its normal volume for it to show up on my feed here. So there's really a lot of flexibility on this news feed, and this is all included with Nic's program as well. It looks like someone's talking about Ideanomics, IDEX. Let's just pull that up really quick. IDEX. And then I can click over to the news. And so, yeah, you can see that there was a press release this morning at 9:47 a.m. And this was tagged with commodities, contracts, news, and short sellers. And then we had a follow-up article a few minutes later, again, with that same information. It was tagged with short sellers. And so, yeah, it looks like they received a contract, and then it has all the details there. So anytime you want to do research on one particular company, you just open up that details tool and you can get all the information in one spot. All right, I think, let's see here. It's 2:12 right now. I think we're going to wrap it up in the next few minutes here. So any last minute questions before we call it a day here? I do want to emphasize that laptop, the Chromebook, is good through today only. So definitely let me know if you have any questions before, that goes away. And then in the last few minutes here, I will show you a quick day trading workspace. Actually, I'll do the gap and go workspace because there's a lot of beginners on here. So this is just looking at stocks, right? So of course, this could transfer over to options that you might be interested in. But a lot of the beginners that I talk to are interested in what's moving that morning. So if you're just looking for the morning gappers, I really like using the movers tool where I can click on the gainers in the pre-market for the entire session. And so this is just going to go show me the percent change since the previous day's close at 4 p.m. Eastern time. And then I can collapse these filters here and just start clicking through some of these to take a quick look at the chart. I could switch this over to a 5-minute chart. And then I could take a look at the news that's causing this. It looks like this was a little fluke with a reverse stock split. But then we go over to BVXV, and we can see that that had a very significant move. And we have this "why is it moving" headline here saying that it signed definitive agreements for the development and commercialization of nano-sized COVID-19 antibody therapy. So basically, it got an agreement for a COVID-19 antibody therapy. That's good because they can make money off of it. And now it's up 95%. So this was originally out at 7:07 a.m. with a press release. Then we had a follow-up article with a tag of biotech at 7:21. And you could also take a look at the chart on the 5-minute chart here to see, that this was definitely a tradable move throughout the day. So again, Nic is really big on do your research ahead of time using the technicals. He is not big on using news catalysts, but if you are someone that's looking for that active news that causes moves like these from $1.80 up to $3.40 within one day, then this can be an excellent tool for that as well. All right, I think we're gonna wrap it up here. It's about 15 minutes past noon, a little bit 15 minutes past the time that we said we're gonna go to. But thank you. Thanks for tuning in today. Again, this is Jonathan Mallard with the Benzinga Pro onboarding team. I appreciate each and every one of you spending some of your day with us. Hopefully you got out of Nic's presentation the same value that I did. And I look forward to talking soon. So until next time, happy trading. This is hilarious. My system actually won't shut down. So I guess I'll answer Christoph's question. How long is that discount valid? That discount, including the laptop, is good through today at midnight. So yeah, and that comes with a 7-day money back guarantee. So just let me know if you have additional questions there. Yeah, just shoot me an email and we can definitely figure that out for you. This is funny. I have to go get someone's help because Zoom won't shut down. But thanks, Robert. Thanks, Christoph. Thank you, everyone. I'm throwing my contact in here one more time, just so everyone has it. It's Jonathan Mallard at benzinga.com and 313-221-9214. And then I'll throw that. Yeah, Zunaid. Help me out, Zunaid. You think I'd have this done since I'm on Zoom about 5 times a week. Yeah, right. All right. Let's see here. All right, take care, everyone.